welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 27th of March 2016 and we're asking the question, is physical silver a cheap purchase at $15 an ounce? Especially as it's fallen from a high of $50 during the past 5 years. Well, firstly, you should ask yourself, what is your time horizon? If you said just 12 months, we would say do not waste your time buying physical. But perhaps paper trade it. Because even if silver jumped $2 to $3 an ounce, you would still lose money based on buying and selling spreads and premiums. If you said 10 plus years, then our view would be somewhat different. And this is why. Supply. The Silver Institute has quoted in its February 2016 report, quote, global mine supply production is projected to fall in 2016 by as much as 5% year on year. Many analysts expect global silver mine production to fall through 2019 as primary silver production from more mature operations begins to drop, unquote. Okay, that sounds promising. Reduction in physical mine supply. But what about recycling, we hear you ask? Well, again, according to the Silver Institute, quote, scrap supply, which has been on the decline for several years, should further weaken in 2016. This outlook is based on additional losses in photographic scrap, a depleted pool of near-market silverware, jewellery and coins, and slowed scrap flows from industrial sources, unquote. Now this sounds even more promising, and yet there is a third part to this supply equation. It's important to consider that the majority of silver that is mined comes as a byproduct of mining operations for other metals. Approximately 55% of all silver produced comes from copper, lead, and zinc mining. Another 13% comes as a byproduct of gold mining, leaving less than a third being mined in its own right. So much like gold miners, copper producers are struggling to cope with low spot prices. One of the ways they're trying to survive is by cutting production. 9 of the largest copper producers announced they would cut output by 200,000 metric tons in the first quarter of 2016. The contraction in the base metals mining industry may indeed contribute to supply tightness in silver, and if it continues, may exceed the 5% mine production fall mentioned by the Institute. Now, we must not forget about above ground available stocks, about which opinion is divided. But the consensus rests somewhere between 1 billion and 2 billion available ounces. Now, any deficit in mine supply of 50 million ounces or less can easily be catered for by this above ground stock. However, for such stocks to leave the hands of its owners, then the price will have to rise from current levels. Nevertheless, it is available. But once again, it would not take many years of decreasing supply to make an impact on these. Now let's take a look at demand. More than 50% of demand comes from industry. In fact, in 2015, according to the Silver Institute, industrial fabrication demand accounted for an estimated 54% of total physical silver demand. Now here is the exciting part. It quotes, photovoltaics for solar energy is projected to rise in 2016 and surpass the 2011 peak of 75.8 million ounces, primarily the result of solar panels, which could account for as much as 13% of total silver demand in 2016, compared with 1.4% in 2006. Some more good news. Quote, silver demand from ethylene oxide producers is expected to jump to over 10 million ounces this year, an increase of more than 25% compared with 2015. Unquote. The bulk of this demand is expected to come from China, which is one reason why we frequently state, watch what is happening in China. Now, if this is not enough good news for silver bulls, well, even jewellery fabrication is expected to increase by 5% in 2016, with the envisaged fall in demand in China being made up elsewhere. It gets even better. Coin demand too is expected to be robust, following a record 130 million ounces of demand in 2015. Many analysts predict that with prices being as low as they are, even this record may be surpassed, especially as early signs show that both US and Canadian mints are forecast to run out of blanks again later this year, should this trend continue. For the record, in 2015, coin demand made up an estimated 12% of total physical demand. Finally, Indian silver demand in 2016 is also expected to grow on the back of investor interest and growth in jewellery, decorative items and silverware fabrications. In 2015, it imported some 228 million ounces of silver bullion, and similar, if not greater amounts, are anticipated this year. So all of this is expected to lead to a widening of the deficit between supply and demand, which should prove positive for prices. Yes? Well, not quite. As the Institute notes, quote, while such deficits do not necessarily influence prices in the near term, multiple years of annual deficits can begin to apply upward pressure to prices in subsequent periods. Unquote. Okay then, that's fair enough. However, we hear you argue, silver hasn't been so cheap relative to gold for more than 7 years. And with mine supplies forecast to contract this year, that may be a sign it's ready to come out of the yellow metal's shadow and investors will sell their gold and buy silver, thereby increasing its price. Well, theoretically, yes. But with the ratio standing around 80-1, according to Ned Naylor Leyland, manager of Old Mutual's Gold and Silver Fund in London, quote, the ratio can go higher still. But at some point, it will turn. And when it turns, it tends to turn with real vigour. Unquote. But he adds, quote, I'm not moving yet. When the trend change is clear, I'll be ready to move money across from gold to silver. Unquote. Capital economics too have indicated that the gold to silver ratio could fall back to 70-1 later this year and towards 65-1 in 2017. However, data compiled by Bloomberg shows that while investors have embarked on a gold buying spree, increasing their holdings in exchange-traded funds by 18% this year, they reduced their assets in silver products by 1.2% through February. However, this has reversed in March when ETFs backed by silver had their largest inflows over 3 days since 2013, rising 500 metric tons to the highest since September. So all is looking good and hearty for silver. Is there anything we've forgotten? Ah yes, economic slowdown, deflation, and negative interest rates. Please tune in to part 2, which will be published tomorrow. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at www.illuminatisilver.com and look at our Facebook page, which is updated daily at www.facebook.com/Illuminati Silver. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.